Hello everyone and welcome to another edition of CEO and Market Expert Interviews. I'm your host Lucian, some of you know me as Triangle Investor from social medias. My returning guest today is George Glasier, CEO for Western Uranium and Vanadium Corporation. George, happy to see you again, sir. Welcome back.
Oh, good. Good to see you again. It's been a while.
It has, and I look forward for this chat. I got a lot of questions as well, and I have my own, of course. A lot of things to discuss and unpack, but maybe we should start with your overview and prognosis of two markets, the uranium market and the vanadium market. What do you believe? What is the current state of those both markets, and what do you expect next?
Well, the uranium market has been really kind of taken a turn from a year ago. The prices were going up. Everybody was pretty excited about things. And over the last year, the spot price has come back down, probably into just below the $80 range. We've seen company equities go down, not just ours, but everybody. It's been kind of a down year. But I think that's probably an overreaction. I'm taking a look. I've been to several conferences lately talking to the, other uranium producers around the world. And, you take a look at what the analysts say, the market price has got to come up. We cannot produce the uranium the world needs at today's price. It won't happen. Some of them are saying we have to have $150 per pound or you won't get the new projects coming on. Now, there's been a few contracts signed, just lately by some of the would-be producers for deliveries, let's say 29 and beyond. But again, I think the producers are telling me they're holding off now on further contracting because the prices are not attractive enough. So again, with that, where are the utilities going to get this material? The reaction to the Russian ban that was imposed by the U.S., well over a year ago, caused the price to go up. Obviously, the ban didn't affect immediately the deliveries from Russian uranium. There were waivers granted, and some of the utilities were continuing to get shipments. But just recently, the Russians announced that they're going to stop delivering. Maybe it's temporary, we don't know. But we understand there was a shipload of enriched uranium was scheduled to come out of St. Petersburg, and it had no uranium on it.
Yeah.
It did not get delivered. So the Russians are probably making good on their claim that they're going to cut the U.S. off. I don't know what the utilities are going to do. We're not prepared for immediate cutoff of Russian uranium because we don't have the enrichment capacity. Now, I think it could be mitigated if the utilities would agree to, share their inventories. And if the Department of Energy steps in, they can certainly do things for the U.S. The Europeans may have a problem too, but I understand they have not been cut off. I think the Russians only cut off the U.S. But I think the uranium market is bound to recover. I think in the next 2 years, we're going to see substantially higher prices, both for the commodity and for the equities. And again, I think we're just going through this very bad time. All commodities seem to suffer this thing, like lithium skyrocketed, now it's down, overproduction. Gold goes up and down. Uranium is not much different. But I think the long-term uranium is really going to be positive. I'm really positive about it. And companies are going to do well. I mean, the companies that are in the space and the companies that are getting in indicate that obviously there's a future for all of us.
Yeah, agree, George. But what's your take on vanadium market?
Well, the vanadium is primarily tied to construction, obviously. The biggest demand is for alloying steel. And with the Chinese economy somewhat down and their demand down, I think, and the world demand for steel down, I think that affects the vanadium price. Obviously, the use for batteries with vanadium is slowly developing. It's not coming as rapidly as people had projected. But I think it is coming. And again, we see the effect of the low vanadium price, with certain companies, and I won't put the names out there, having substantial problems because the vanadium price is just too low. And with a low vanadium price, it drives out production. It doesn't encourage new production. So I think you're going to see the same thing in the vanadium market over the next few years. You're going to see a lack of new production because the price is just too low. And unless that price recovers, you're going to potentially have shortages of vanadium when the world finally recovers, and it will recover. Construction will go up, demand for batteries will go up. So the vanadium market is a little bit farther out, I think, in the recovery maybe than the uranium market, but I definitely see it's coming. But at $5 vanadium, people just aren't making money. You
Yeah,
know, there
yeah,
might be a few exceptions, but most of the big vanadium producers have adjusted by cutting cost or actually having problems. So
yeah,
I,
yeah.
I think we're pretty optimistic on the vanadium front, you know, out 3 or 4 years.
Yeah, in the long term. Okay. George, let's cover company developments first. The mill. I have a lot of questions here. Let's cover that first. Can you give me actually an update on the mill site and developments? But maybe first you could explain the reasoning behind the acquisition of another mill site announced on October 1st.
Now that's a real good question that we probably haven't explained to the market adequately. What happened is we obviously acquired the site up by Green River. That site's about 4 miles from our San Rafael project. It's over 200 miles from the Sunday complex. We started the engineering on the site. We started collecting all the background data. And it was a site that certainly could be used for all of our projects. But as we started to look at the economics of Sunday Mine, where our first major production is going to come from, the transportation cost, in addition, going to that site over the site we acquired would be about $8 million a year. It's fairly significant. And that's at today's transportation cost. And transportation is one of the costs that continues to go up. You know, with the cost of fuel, the cost of labor, transportation is not going to go down. So we looked at it and said, is there a site closer around? Now, the site that we acquired, obviously, was a site that I own 50% of. That site, when we acquired the Green River site, was not available because we could not buy it because of the other owners were not interested in selling that site. We looked at that site, but that site was not available to us. But for whatever reason, after a period of time, these owners decided that, yeah, maybe it was a transaction worth, you know, their cooperation. So we were able to acquire that site. It's a site that's been licensed twice. You know, people are saying, well, why did you pay that much money? Well, that site had at least $10 million worth of engineering and value in the existing base that we had on the baseline data. So the purchase price of that site was quite reasonable. And so we're way ahead with developing that site because of the baseline data we have and all the engineering data. We will be ready to submit our application probably in about 6 months. We're updating the baseline studies. We've talked to the regulators and basically said, let's confirm that the original baseline data is still adequate. And by doing that for 6 months, we think 6 months worth of updating will give us the opportunity to submit that application. Might also mention that site is probably the best located site for not only our deposits, but a number of the other deposits. The deposits that are now currently held by Anfield. One of their deposits is a half a mile above our mill site. And there's just a whole lot of the uranium vanadium in the area of this site. The high vanadium is in this area. For instance, when you go over into the Green River area, the vanadium values go way down. I think the vanadium values of the Sunday Mine are 6 to 1. The San Rafael are only about 1.5 to 1. So there may be a reason not to put a vanadium circuit in the mill over by Green River because the lower values of the vanadium may not justify it. So that's another reason to build one closer to where all the high vanadium is. And you take a look at the number of deposits, not just our deposits, but the number of deposits up and down the Urvan mineral belt indicates that we need a mill closer to those mines. And this site certainly qualifies for that.
Yeah, that's a good rationale behind that decision to buy this land. But how are you? Where are you now in the permitting process with the original site and the new site? And actually, which one do you expect will be permitted sooner?
Yeah, the original site, we're still collecting the background data. We've got probably another quarter worth or 2 quarters worth before we have adequate background data to decide to submit an application. But with some recent developments, obviously, you know, that have been announced, one of them is the ISO acquisition of Anfield. That puts that possibility of that mill a lot closer to reality. We believed when Anfield's a good company, but they just didn't have the wherewithal to develop that mill. ISO clearly does. And so we've had discussions with ISO. There may be synergies of us not building a mill there and maybe going to their mill. If you think about it, you don't need two mills in the Green River area. And if that mill goes forward, we may not need our mill if we can go into their mill with our Green River project. That may make a lot of sense. And from their standpoint, with their deposits, which are, the Anfield deposits, once they complete that acquisition, their deposits that have the high vanadium would be far better off coming to our new mill site. So we were kind of waiting for the ISO transaction to be completed and further discussions with ISO about potentially cooperating between the mills. So that gives you an update on Green River. We're not stopping, but we're now looking at a different scenario there, which might be better from the investor standpoint. We certainly don't need to build two mills. The best thing we would do is we might put the ablation process at the Green River site and ship to the central mill over, our new mill site. We would not build two full mills.
Yeah, I understand that part. Totally. So that is the reason why actually engineering design study has been delayed a couple of times.
Exactly. Yeah, we delayed it because of that. We've changed the sizing of it a little bit. After the engineering did this, we got through the cost estimates. We adjusted things in relation to what we intend to feed. So it's been delayed. We do have some final engineering plans. We do have some cost estimates that we haven't released yet. I think we'll be in a position to release something early next year when we finalize these things in the next probably month. Some economics of one or both of the mill sites.
Okay, so actually now it's all stopped before the big decision will be made. I mean, with the financing, with the funding of the mill, targeted start of operation and other important details. Now it's all on stop, right?
Yeah, at least, yeah, other than the permitting process is going forward with both the new mill site, and we haven't stopped it with the Green River site. So that is still going on, and that's not real costly. We're setting up the monitoring equipment, but that process is going on. And 6 months, we'll be able to make the decision. Probably middle of this coming year, we'll make a decision on which site to go full out with and how to. And I think at that point, we can tell the investors what our plan is a little bit more clearly for the development of the mills. But we clearly need a mill. There's no doubt about it. We probably will be shipping some more to Energy Fuels under an ore purchase agreement here shortly, but we think that's short term. We think that mill is clearly going to a rare earth production facility. They've announced all their acquisitions of rare earth material around the world, and they'll fill up that mill with rare earths. We don't look at that as a long-term viable uranium producer. Now, I think that's again why ISO probably decided to acquire Anfield. Even though they've got a toll milling agreement with Energy Fuels, if Energy Fuels is not operating that mill for uranium, their milling agreement doesn't mean much. So I think that's what they probably looked at and said maybe a new mill is in their interest. So we need at least one, maybe two new uranium mills in the western U.S. clearly.
Yeah, I wanted to ask you more about the mill, and I will actually a little bit later. Can you please give me an update on development of the Sunday Mine complex? By now, you have done a lot of underground drilling. What did you find?
Okay, well, interestingly enough, we started our drilling program. We had a very good geologist. We were drilling, we were collecting data, and we lost our geologist in July before we could report any results for it. And so what happens, we just did in the last month hire a new geologist who is updating all the data. So we should be able to report something in the next month or two about the results of the drill. And we have had success drilling over the last year. We just haven't been able to report it. Two reasons. One, our geologist was not a qualified person, the one that we lost in July. The new geologist will be a qualified person, so we can report intercepts, grades, things like that with our qualified person. So that will be a real plus. So we will be reporting some drilling data. We had put our drilling program on hold about 3 months ago because we didn't have a geologist to collect the data. The drillers were logging and collecting the data, but we weren't comfortable with that. So we basically stopped the drilling program. We will reinitiate the drilling program probably in a couple of months once the new geologist is up to speed and has collected all and compiled all the past data.
Yeah.
But that program is going well. The development program is going quite well. We're driving drift to get to the next ore body that was drilled out actually by Denison years ago. And we knew we were going to hit ore as we drove that drift to that deposit. And we have. We've hit considerably ore. And we've done a little bit of drilling but what happens when you shut down the development to drill because you can't be blasting when the drill is in there. So it slowed down the development. So we decided the best thing to do is go right through the ore zones without doing any additional drilling until you can advance that drift away from the drill site. And then you can put your drill back in. So we will be drilling there. But right now, we did that for a while. We shut down the drilling or the development so we could drill. Excuse me.
Sure.
So we are developing. We've got 2 full mining crews at the mine. We're working 7 days a week, 12 hours a day. We're developing to that ore body, and we're also developing the GMG ore body so that can go into full mining.
Okay, so in the perfect world, George, when can we expect updated resource estimate?
I think we can give you an update on the mining activity, early next year, and we certainly will do that. The advance of the decline and some of the drilling results, but you'll get an update on the activities at the Sunday mine early next year, but certainly by February.
But George, do you have any early numbers, so to say, of the maximum production rate you foresee achieving?
We've calculated the Sunday mine could easily produce about 500 tons of ore a day at the grade we would produce. That's about 1 million to 1.25 million pounds of uranium and maybe 6 million pounds of vanadium. And that's a pretty easy rate to achieve at the Sunday mine without really pressing. And that's just working probably one shift, obviously, 7 days a week, but that's one shift. And that ties in with what we initially planned for the production of the mill. So again, the production of the mill would be fed primarily by the Sunday mine. And then as the San Rafael comes on and additional deposits come on, then we will expand the capacity of the mill. But initially, we'll build the capacity of the mill primarily for the production for the Sunday mine. And that's about 500 tons of raw ore a day, or about 1 million to 1.25 million pounds of uranium, which is not a huge amount, but at $100 uranium, that's $100 million worth of uranium plus, you kick in the vanadium. Even if the price is only $6 or $7, you've got a significant. We've got probably $150 million worth of product coming out of that first production from the Sunday mine.
Yeah, in that scenario, when would we expect a maximum production rate? Year 2, year 3?
Well, the maximum production rate of the Sunday kind of depends on developing, the additional ore bodies that we're finding as we go along. But we're projecting the 500 tons on what we already know is there. Okay, so that's why we're using 500, because we know that can be mined, because in the GMG and the ore body we're going to, we can easily. But as we develop these additional ore bodies that we're finding in there, then that could up the production. But right now we're not making projections. It could probably go up to 700, 800 tons a day, but I don't want to project that until we've done significantly more drilling on it. But again, we've got enough production to feed the initial capacity of the mill. And obviously, we've got a couple other projects we're starting to develop. Our Van 4 project, we're looking at putting a new decline into that project. Our Sage project, that's another one that we're looking at put miners into. They're smaller projects, but they could very well contribute to the production. Also, we announced that we were in a joint venture with Rimrock. We have acquired a 50% interest in those 2 mines. They're fully developed and fully permitted. They're not going to be big producers, but between those 2 mines, you could add another 50 to 100 tons a day. So we're also concentrating on some of the smaller projects that we have to supplement or complement the production out of the Sunday mine. Now, the San Rafael, We're
Yeah.
doing the engineering studies now, and that will be a shaft mine, and the production out of there depends on the size of the shaft we put in and the hoisting capacity coming out of that mine. And that's what our engineers are working on now. We could probably size that from somewhere to 300 to 500 tons a day based on shaft sizes that we're looking at. And that'll be the initial with one shaft. One shaft would be our first production. As you expand that, you'd have to put in another production shaft to expand the production. So that's going to be, the limited production with any shaft mine, not just the San Rafael, the size of the shaft and your hoisting capacity for your ore. So we're looking at 300 to 500 tons a day out of that one, depending on, the capital investment and the shaft size. We're doing the economics there, and we'll have some things to report probably later in 25.
Later in 25. Okay, San Rafael is a big property, big project. Do you have any exploration plans for 2025?
Well, we do. We've got a drilled out resource. It's been drilled considerably. There's some additional drill data that we don't possess that shows additional pounds on it. The party that has it has offered to sell us that data. We haven't been able to reach a price yet. One of the concepts is, rather than drilling from the surface, once we've got the permits, that we can sink the shaft right now. But sinking the shaft, we could start doing underground drilling, and that may be better than surface drilling. We don't have any plans right now for surface drilling on that, but the idea is maybe wait until we get underground, because then you're drilling right in the ore zone instead of going through, say, 1,000 feet of barren rock to get to the ore zone. So we're thinking that might be the exploration project for the San Rafael, is wait until we get underground. And again, we could possibly be sinking shaft. It depends on the economics and the uranium price, obviously. Money is a little bit harder to get. We're seeing that for not just us, but other companies. Capital is a little bit scarce. We did a small raise so that we can assure ourselves we've got the money to produce into, let's say, an ore purchase agreement with Energy Fuels. It'll generate a significant amount of cash for us. Again, we're conserving cash. We've got some initial estimates on the cost of sinking the San Rafael shaft. And again, we'll wait till the uranium price justifies raising the capital for that project.
Makes sense. You also own the Hansen Taylor Ranch project in Colorado, some 50 million pounds historical reserves. This does not seem to be appreciated in your share price. Do you plan to make that more visible?
Yeah, it's not, and it's a big resource, and it could be developed. In fact, what we're doing, one of our projects for this next year in our budget, is to develop a mine plan. There's been some additional drilling. One of the companies picked up some of the properties that we dropped that weren't as valuable, but they did some drilling just recently and took some samples to determine basically the best method to mine that. And so we're cooperating with that company. We may form a joint venture to develop that project, but form an arrangement where we can decide the best method to mine that and then start permitting the project. We think that project could certainly be in production in the next 5 to 6, 8 years. It's not 2 or 3 years out, but 5, 6, 7 years out. That project would complement the feed to the mill, definitely. So that project's a big resource. It's one of the biggest resources in the United States, and we are not getting value for that. You take a look at, I wanted to mention that a couple of the transactions just recently that kind of put value on uranium resources. You take a look at the Anfield acquisition by ISO, the price they're paying, is a fair price, but it indicates a pretty good value for those resources. And you take and compare our resources to the Anfield resources. Our resources are much closer to production and in much better areas. I'm not saying New Mexico is a bad jurisdiction, but because of the problems of getting ore across the Navajo reservation, any deposit in New Mexico is years and years out from development. So you take a look at where their deposits are and how soon they can be developed. Our deposits are in very good jurisdictions. Take another look, it's an exploration project, but the Orano acquisition of a suite of exploration properties for a purchase price to be paid over time of over $10 million, basically for a suite of exploration properties with no current, defined resources, shows that these properties that we control are worth far, far more than the market value assigned to them today. Again, but it will come, and we think the investment community will recognize that over a period of time and give, companies like ours the value that we really need and should have based on our resources.
Yeah, quick return to your buying agreement with Energy Fuels. That agreement is still in the same form. It wasn't amended or something. It's in the same form as signed originally, right?
No, it was amended. We had a few comments, the first draft of it. We had a few comments, which they incorporated the comments. We got the revised draft back last week, incorporating our contract comments, and it looks good. We haven't signed it yet, but I think we're prepared to sign it. There was one small issue I need to talk to them about, but other than that, I think it's acceptable to us, and they drafted it. So we expect, certainly to have a contract signed, certainly maybe by the end of the year, and delivering ore once it's signed, probably within about a month. It'll take us about a month to get ready to go. We've already stockpiled the ore, and that's another good reason to deliver it to Energy Fuels. We've got ore stockpiled in the mine that should be moved out, and we will do that. And so we've got the capability of delivering the quantity of ore specified. And again, the terms of the agreement are confidential, so I can't tell you what they are.
Of course.
But we have enough ore mined to fill the contract, right now. But
So
again,
actually,
we've already mined it, obviously, as we announced to the market. Plus the low grade stockpile outside the mine, we will blend that high grade ore with the low grade stockpile. There's 100,000 tons of low grade material that's been mined over the years sitting outside. So we've
so
got
George,
very,
long story short, you plan to continue stockpiling the ore until maybe your own mill is
yeah, we
operational.
don't have any choice as we're doing the development, we're going through ore. I mean, you don't have any choice. So we are stockpiling that ore every time we have to blast through those ore zones. So yeah, we're stockpiling ore. And it'd be good. We'll be able to haul that to Energy Fuels and recognize cash flows, and fairly significant cash flows. The cost of mining, a lot of that's already been, incurred. So we won't have a full mining cost. A lot of it's already mined.
Yeah, yeah, yeah. Let's say if we see a spike in the uranium and vanadium price, would you consider increasing the volume of ore you deliver to White Mesa Mill? For example, with uranium of 150 or $200
Well,
dollars.
again, I can't tell you the terms of the agreement, but right now there's a specified quantity in there, which would have to be renegotiated. Uh, if there were a price change, and the prices are already agreed to. So again, the contract in place, would have to be renegotiated between the parties. And that's a possibility, certainly, but I wouldn't say it's something we would be looking at. I think we're pleased with the contract the way it is. It'll generate cash flows for us. I think it's good for Energy Fuels. It's good for both of the parties. But then any change would have to be renegotiated uh, down the road.
Understood. George, do you plan any uplisting maybe to TSX or maybe the American Nasdaq or New York Stock
Well,
Exchange?
yeah, we obviously we want to upgrade our listing. We're looking at both the Nasdaq and the American. Again, the big thing is getting our share price up. We qualify in every respect. We've talked to both of those exchanges. We just need to get that share price up, and we're ready to do it. And again, it's been disappointing we haven't been able to get our share price up to do it. But once that happens, we will uplift. I
But
think that will be a real major. Well, there's been a suggestion that we do a reverse, a consolidation. We've resisted that. Most consolidations don't work. I mean, they go up for a while, but we've kind of, our investment bankers have suggested that. We've kind of resisted that, hoping we can make it just on our values without doing that. But I suppose that is an option at some point we could consider. But we haven't agreed to that at this point.
yeah, but there is a high probability you will uplist in 2025, right?
If we get the value up or even if we had to do a consolidation, but I think there's a good chance that I think that would help our trading volumes considerably and our values. Yeah. We're
Yeah, don't get
certainly
me wrong.
looking at
CSE
doing
is
that,
is
definitely.
not so liquid like TSX. For example, the Europeans, they have a lot of trouble buying stocks on Canadian Stock Exchange.
Is that right? And we could go to the TSXV right now. That's maybe
That
that's
would
an uplift.
help.
And
That
we've looked at that. We're pleased with the Canadian Stock Exchange. They've been very good to us. And maybe there is some value to going to the TSXV. We should look at that. And if the Europeans can't
I
trade
believe
on
so.
the CSE, maybe
Yes.
that's what we should do.
Yeah.
Uh, that's good advice. I'd like to talk to you more about that because
Sure. Sure. I
obviously
can.
the U.S. investors, Canadian investors can trade on the CSE, but if we're missing the European market, maybe that's what we ought to.
Yeah.
So I'd like
Majority
to
of
talk to you
brokers
further
do
about
not.
that and get some advice on that.
Yeah, yeah, yeah. George, you have raised 5 million recently. For how long do you expect you are covered with that amount?
Well, with the delivery of ore to the energy fuels, we're covered for, with no more plans than what we're doing now, we're covered for several more years, with the cash flows that we expect to come off of the ore purchase agreement. So that's why we raised the money. We saw that maybe we're going into kind of a period of a little bit downtime for the uranium industry in 25 with the change of politics in the United States, the uncertainty. So we thought we would raise that money. So we're well set with our cash that'll be coming in for at least a couple of years. This is our
Yeah,
plan right now. Now, obviously, if the uranium price moves up and we decide to develop faster, that creates, the need for more cash. But right now, we're basing it based on the uranium price being slowly, a slow increase over the next 2 years, but not a rapid increase that demands, more production capacity. If that happens, we'll have to adjust. And again, I think the market would adjust to that. If uranium prices went up, I think the share prices go up. Capability of raising money at higher prices is not a bad idea.
of
But
course.
right now, we're not planning on a raise, anytime soon.
Okay. You mentioned that you hired Nathan Bishop as the lead geologist recently. How is your employment plan for 2025 looking? Will you add some more people as you advance those projects?
It's interesting. A year ago, we had 17 employees. Today, we have 36. Virtually all of them were hired related to the mining operations, safety, the geologists, new miners. So we haven't expanded our administrative staff at all, but we have expanded the mining staff considerably. I think right now we are where we want to be for the next year. We've got enough miners. We've got 2 full mining crews. We've got 1 drilling crew. We're not drilling right now, so we've turned to drillers and they're doing some other work in the mine. But we'll start that drilling, in the next month or so. But we've got 2 mining crews doing development work. We may need to hire a couple of people for the delivery of ore to energy fuels, but that would be maybe only 2 more, maybe 3 more people. So we're pretty much set with our crews right now through this year, at least through 25. That's not going into full mining. Obviously, when we go into full mining at the Sunday mine, then we'll have to increase our mining crews considerably. But we're not looking for full mining. Our deliveries to energy fuels don't entail full mining at the Sunday. We've
Yeah.
already mined most of the ore that we're going to deliver to the White Mesa mill.
Yeah. Do you have problems with hiring people, the skilled labor issues in Utah? Is it present?
Yeah, clearly there's a problem. Experienced miners are difficult to find, but interestingly enough, there have been a number of mines shut down in the U.S., underground mines. You know, so we've been able to attract miners from some of these mines that have shut down, and obviously the pay scales are competitive. And again, miners come and go. We're finding that the tramp miner, the one that comes and stays for 6 months, they just move with the wind, I suppose. They're good miners, but what we're doing to alleviate that problem, we've hired a lot of the young local guys that want to be miners, and they're making good money, and they're turning out to be excellent miners. It's about a 2-year program to train a beginner to become an efficient miner. And so we started that process about a year and a half ago, and we've got our first crop of those that are really right now experienced miners. So that's the way you maintain a better, stable mining crew is bring in the locals who want to do this, and they make good money doing it. We still need the experienced miners to train them, and we have enough of those right now to train new guys. But it's a challenge, and it's going to be a challenge for any company that starts up. Anybody that wants to start a mine is going to be faced with the labor issues. I don't know whether it's around the world, but it's certainly the case in the U.S. We just don't have the experienced miners, and even getting the equipment you need for the miners. We've been fortunate. We've been able to acquire the equipment, whether it's new equipment or used equipment that we're refurbishing. We've got 3 full-time mechanics, and we've acquired used mining equipment. They're refurbishing at a fraction of the cost. We're building a new truck for an underground truck that would cost $300,000. We're going to have $60,000 in it. It's going to be like brand new. But that's because we've got a crew that knows how to acquire some of this used equipment, and we've got the mechanics to fix it. But the lead time on some of this equipment, not that you have to pay a lot of money, you just don't have it. They're just not sitting on the shelf. You have to order this. We've ordered a couple of things for one of our loaders out there, and from a major manufacturer, and we ordered these a year ago, and we're finally just going to get delivery of them in the next month. It's just incredible the lead times on equipment. And so people that are going to, some of these companies that plan to start mines are going to run into the same issues we found. And that's a reason, you're going to see the uranium price have to be substantially higher. It's not easy to start mines, and it's not cheap. And so I think that's what the world is going to face. It doesn't make any difference whether you're in the U.S., Canada, Australia, Africa. It's going to cost more and take more time to develop these mines than everybody has, planned on in the past.
Agreed 100%, George. You're a conventional miner, but is there any ISR potential on any of your properties?
Oh, absolutely. The Hansen Taylor is an ISR possibility, definitely. It's in the water table. It's got thick ore zones, very thick ore zones compared to some of the ore they're mining in Wyoming. Our ore zones are 100 feet thick. It's certainly amenable, and that's one of the tests that we did, or one of the tests we will be doing as potentially the mining method. It could be an ISR. The ones in western Colorado and Utah are not ISR. The formations are too tight. So solutions would not flow through them. So they have to be mined conventionally. But the Hansen Taylor is a bit different. I mean, it is in the water table. It's a very loose deposit. It could be mined with, and we're looking at that possibility.
That's good to know. Final question, George. You have oil and gas royalty property. Tell me more about it.
Well, that's a passive asset we have. We acquired that when we acquired Black Range. It has some uranium on the deposit on the site up there, and we leased it for oil and gas. We get monthly royalties that depend on 2 things: the level of production and the cost of price of uranium, or not uranium, but oil and natural gas. Natural gas is up a little bit. It's been down. Oil is, of course, down. Our royalties vary. It's a nice little check we get every month, but it's something we don't have any cost involved in it. It's just kind of like free money coming in, but it'll come in. I think the deposit, is probably a 20-year production. We've been offered, several companies want to buy out our royalty positions. We've said no. We don't know what it's worth, over the long term. I could probably turn around and sell it for several $1 million, but I don't know that that's a good thing. Because selling out an asset right now that may be worth a whole lot when oil prices go up, or when they decide to increase production, and they could increase production by drilling more wells there, because it's certainly a big block. We're just one of the part of the big block that they're drilling on, but we think those royalties will continue at substantial rates, maybe not much higher, but substantial rates for years. So it's a good revenue, but it's we don't look at it as our prime source of revenue, but
it's a cream on the cake.
Every month I go to the bank with my check.
Yeah. That was George Glasier, CEO for Western Uranium and Vanadium. George, thank you for coming to my show. Great chat, and looking forward to update shareholders soon again.
Good. I certainly appreciate talking with you.